I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, December the 18th, brought to you in part by Cargill Ranger. Ranger limiter technology gets you the results of hand feeding without the daily chore. Working with your forage, Ranger limiter encourages cattle to eat smaller, more frequent meals without overdoing it. Available in different forms to fit different needs, Ranger limiter technology can help put on more pounds per animal per acre. Looking on Monday here, we found out that the sales volume in your feedlot negotiated trade last week was very light, lighter than what we had suspected. It seemed like kind of a normal trading session, but we don't really know how many cattle moved, what all happened until we get all the information that's put in through mandatory price reporting and then comes out on Monday morning, and found out that we sold just a little over half what we thought we probably sold. So that makes a difference and is probably going to bode well for getting through this holiday break and moving into the next year on 2019, kind of springboarding this market in, because these packers are going to be fairly hungry for cattle. Let's look at the board on Monday. Your December live cattle futures down 55 cents, ending the day at 119.02. February contracts down 85 cents to end the day at 121.55. Your feeder board was down hard too. Pretty much all your commodities were down hard. Your stock market was down hard. Everything were down hard except for probably soybeans, because there's still some talk about China coming in here, or the way Trump's held their feet to the fire and straightening out some trade indifferences there with them, and they're probably going to come in, and that's going to be the main product that they buy right off the get-go that's going to make a lot of difference. But tell you what, everybody's down on Trump right now, and it seems like he can't catch a break, but and threatening to do a government shutdown. A lot of you know I worked for the federal government for nearly 20 years with USDA Ag Marketing Service, and I'll tell you that government shutdown is much ado about nothing. We had about 3 of them when I was there. It's all political. It doesn't amount to anything. Anybody that's essential for health or moving day-to-day things in the government, anything like that, they still work. It's just non-essential people that can either catch up or reschedule what they do that gets basically laid off, but they've never had a government shutdown where those people didn't get reimbursed for what they missed out on. It's nothing. They really just want turmoil to happen whenever they have those government shutdowns. They want people to be unhappy because they're not getting government services and things like that. And about the worst thing that can happen, which I found out about, is working during the government shutdown, trying to give customers what you normally give them, talking to trade and producers, say if you're in a market news outfit, continuing to train your state employees, which is a big no-no I found out about, even if you don't ask for the money, which you know you're going to get reimbursed for anyway. But they just want turmoil. It's a totally political deal, and probably as good a reason as any is to get the money for the wall so he can get that built for border security. But feeder cattle for January down $2.20 to end the day at 145.37. March down 245. Feeders were down big, 143.32. And like I said, the weighted average on last week's negotiated fed cattle sale in the 5-area feeding region was very light, 60,000 head only. That compares to 106,000 the week before and just short of 94,000 the same week a year ago. So they were short. And then it's funny, your show lists come out and they were much lighter than they were a week ago. I've never been a big fan of the show lists. About like anything else, you ask people to give you a tally on when they know if they tell you the truth it's going to hurt them. But but these packers are going to be hungry for cattle. I'm going to show you here in a minute. They didn't buy hardly any for the 15 to 30 day delivery, which would really help them get going again after the New Year's break. But so this could be a good thing in the long run. But you look at your weighted average prices on live cattle, which sold mostly 118 to mostly 119, especially in the southern plains, and there was even 119 in the northern plains too, despite muddy conditions, but that was mostly steady. Come out at 118.14, and we stay steady. Actually, that $118.14 on the average for live steers was 3 cents higher than the previous week, so pretty well steady. Your dressed was quite a bit better, and we saw a little bit more dress trade because it got so much tag on the cattle. Your packers in the northern plains, especially in that eastern Nebraska, Iowa area, they want to buy cattle dressed because they don't want to gamble on how much tag those cattle are carrying. But it was, we thought 187 to 188, but it was pretty much all 188. Your weighted average on dressed steers was 187.62, and that's even with some early sales in there off the pace, but that was up $1.63 from the weighted average price on dressed steers from the week before. But nationwide, on the fringes outside the 5 area plus that, just 72,800 head nationwide negotiated sales, and only 6,800 of those for the 15 to 30 day delivery. So not much purchasing there. They would have liked to have gotten more done, and I'd heard that they had at least steady bids out even Monday morning looking for more cattle before people really just abandon the place. They just got done abandoning it for the rodeo out in Vegas, and now they're going to abandon it for mother-in-law's house, but getting ready to kind of wind things down here for the holidays. But before we start talking about your feeder cattle markets, I want to talk about something I've been wanting to mention for quite a while. Is a lot of these feedlots that have bought some of these cattle, contracted cattle, and bought cattle all fall, kind of had their ideas of what it was going to cost to feed those cattle. Well, it's gotten wet early. That's added to your cost of gains. But another big thing is we're all enjoying these lower fuel prices, but it is hurting the ethanol industry a little bit. You can imagine it's not nearly as profitable to run those ethanol plants, which are kind of struggling anyway. And whenever they dial those back, your distillers' grains are not going to be coming out the other end nearly as plentiful. And so they've dialed those back. So in turn, your DDG prices, which almost everybody, especially in the Midwest, is relying on to keep their feed costs down and keep their cost of gains down, they have risen 20% or more just in the last couple of months. But now we're seeing distiller dried grain prices as high as $180, $185 a ton up in the Midwest. That's significantly going to add to the cost of gain on these cattle. That's going to raise their break-evens. They were pressing it on the break-evens on the hedges they put in anyway. So they're definitely going to have to bank on a big basis like they saw all year pretty much until late in 2018 to make those break-evens. And if that doesn't work, they're going to have more equity loss. We know we've lost a lot of money this year feeding cattle, and but a lot of it's been equity loss. You know, they don't lose the farm right off. They gained a lot of equity back there 4 or 5 years ago when they made a lot of money feeding cattle and didn't take a whole lot out of there. They wanted to get some equity back in their feeding operation. Now they've lost a lot of it. Some of them are getting on kind of thin ice on their equity, and if we continue to see big losses like that, then we'll start hearing about outfits going down. But let's talk about your feeder cattle markets. Your real-time index on Cattle Market Central late in the day on Monday set at 143.38. That was up 26 cents compared to the end of last week. So still gaining ground, and that's with some high volume sales, especially in the southern plains. Now keep in mind, after this, all your regular sales at your highest volume feeder cattle auctions like El Reno, Oklahoma National Stockyards, Joplin, and pretty much all your big high volume feeder cattle auctions are all going to be shut down for sure 1 week. Those three that I mentioned are going to have all three or all of their regular sales shut down for the whole 2 week holiday, both Christmas week and New Year's week. Joplin will get going again on January 3rd with a wean vac special on a Thursday plus a primetime video, but we're going to see things really dial back, and I do believe that we're going to see kind of a resurgence in your feeder cattle market, your feeder calves especially. Most all your big feeder calves will be long time weaned, had snow on their back, been through a couple of storms, and your farmer feeders will come in and they'll be ready to buy some cattle, because that's about the only way they've made any money the last few years, was feeding the cattle. But just simply shutting down the flow of all these cattle coming in to the lots for a couple of weeks will help the market as much as anything, and that's what we'll probably see. But we've still got some more business to do for the rest of this week. You look at your biggest market on Monday, Oklahoma National Stockyards in Oklahoma City, 9,000 head. Feeder steers there $2 to $4 higher. Feeder heifers were kind of steady to weak in a lighter test. Steer calves $2 to $6 higher, and we just keep seeing that steer heifer discount widen and widen and widen, and it seems like that, you know, the steers all ought to be bringing $2 a pound and the heifers $1 a pound now, but not that wide. But just all fall they've just really been after the steers, and then not too crazy about the heifers. But included in your Oklahoma National Stockyard sale there on Monday, they had the All-American Beef Battalion, which they auctioned off a steer, kept selling it and pooling money up to give to help feed military families that are in need of it. Raised nearly $50,000 just there in the sale barn, just a few guys that are sitting around. And Oklahoma City's not one of those sales that just fills the rafters. It's mostly just order buyers and a few of your bigger producers that come to watch their cattle sell. But $50,000 right there in that small auditorium, which is funny. That's the same amount that the PNS decided to fine JBS in Grand Island, Nebraska for shortchanging people at the hot scales for 3.5 months. But doesn't hardly seem right, does it? But let's look at Joplin Regional Stockyards. 4,300 head there in Joplin, steady to $3 higher there. That's kind of a small sale for Joplin, but not a big run, but a good market catching up. And pretty much everybody I talked to all around the circuit said that the trade was still even more active maybe than it was the last week, which recovered big time from the previous week. From that we had such heavy receipts and demand was down, and wet conditions really hurt the market and it was down. But what we didn't gain last week in recovery from the previous week, we probably have gained early this week and will continue. So we'll catch a lot of that back up, and I tell you, it was really a wreck 2 weeks ago. But you look at some individual quotes, and they're both up there in Missouri. But I tell you what, we're getting to the time of the year where southern Iowa, eastern Nebraska, Missouri, they're going to have cattle when everybody else is running out of cattle. And then a lot of the orders will come into that area, because those people that in that part of the country, they farm and raise cattle. They don't have time to wean and work their cattle whenever they're busy in the fields, and they do that after. And then now it's been long enough for them to get their cattle selling, and we're going to see big runs in northern Missouri, southern Iowa, right in that heart of the Midwest country. And that's where we're going to see a lot of big prices coming from, especially after the first of the year, and that's their biggest sales are in January right in that part of the country. But F&T Livestock in Palmyra, Missouri, had the best quote on feeder calves on Monday. 69 head of 672-pound feeder steer calves, 158 and a quarter. And then at Callaway Livestock Center, Kingdom City, Missouri, right on I-70 there, and just east of Columbia, Missouri there, had a really good set of yearlings there. They belong to Jack Harrison, part owner and auctioneer there at Callaway Livestock. He backgrounds a lot of cattle too, which are put together but would still be northern quality cattle. But this particular load that he sold on Monday was out of his home raised herd. So they were extra fancy. I mean, all black, everything right. He gave the buyers a fair weigh up and weighing condition there, but sold 60 real good yearling, lightweight yearling black steers, 812 pounds at 154 and a quarter, and Greg Hess bought them to send to Nebraska. And that'd be your feeder flash for Tuesday.